Hi, this is Jim Pearce, Chief Investment Strategist for Personal Finance, with a weekly update on Friday, October 25th, 2024. Earnings season is underway, with hundreds of companies due to release their third quarter results in the coming days and weeks. On the whole, I'm expecting those numbers to exceed guidance given the strength of the economy over the past several months. However, there will be some clunkers in there that temporarily drag down the overall stock market. There will also be a few random events to upset Wall Street, such as this week's revelations that yellow onions used by fast food giant McDonald's has sickened dozens of customers with E. coli poisoning. 2 days ago, McDonald's share price fell 5% after that news became public. That move wiped out all of its gains for this year. So here's a chart of McDonald's year to date. You look way over here on the right, it was doing really well until a couple of days ago, and then the E. coli breakout news hit, and boom, there's the big drop. So if you take it where it is right now, and this is Friday afternoon around 2:45, you can see McDonald's trading at 293. If you follow that line all the way across, it's almost precisely where it started this year. One of those customers died as a result, exposing McDonald's to the threat of an expensive lawsuit. Also, there will likely be civil lawsuits filed by some of the surviving customers. But in the end, McDonald's will weather the storm and move on. That's why it's important to differentiate between short-term challenges and long-term problems. A year from now, McDonald's share price will not be affected by this month's E. coli breakout unless it happens again. At the same time McDonald's was dropping, electric vehicle manufacturer Tesla soared 20% after releasing fiscal 2024 Q3 results that came in far better than expected. During the third quarter, Tesla's total gross profit increased 20% on a year-over-year basis. Another company exceeding Wall Street's expectation this week is real estate investment trust Digital Realty. Although its third quarter results are in line with guidance, the company raised its guidance for core funds from operations for the remainder of the year. That's important since FFO is what determines how much money is available to distribute to its shareholders as dividends. Now, one reason why Digital Realty raised its guidance for FFO is surging demand for its global network of data processing centers due to the rapidly expanding artificial intelligence market. Digital Realty is up nearly 50% over the past 12 months and is now at an all-time high. So here's Digital Realty's chart for the past 12 months, and you see way over here on the left, down around $117. Come over here to the right and look at this big spurt. And what I'm going to do, and you can see it's at 181 today, I'm going to pull this into the past 3 months so you can just appreciate how severe of an updraft that is in its share price. Now, as well as Digital Realty's performed recently, consider fellow REIT Iron Mountain, which has more than doubled in share price during the past year. It is converting several of its storage facilities to high-speed data processing centers to facilitate AI usage. So here's Iron Mountain's chart over the past year. You go way over here to the left, it's $58, $59 a share, and today you can see over $128. Those two examples illustrate the positive impact that AI is having on the overall economy. And this is not a short-term phenomena. According to Statista, the worldwide market for AI was roughly $136 billion last year and is projected to grow to $827 billion by the end of this decade. So I have a link to this page from Statista. They break it down by subcategories. Within the AI market, you can see that over half of it here is this kind of gold color, which is machine learning. They also break down the growth curves for each of those submarkets. So if you have the time, I recommend clicking on the link and just taking a look at some of this data. Now, examples like Digital Realty and Iron Mountain is why I don't put much weight on short-term setbacks, such as the one McDonald's is currently experiencing. Of much greater importance from a long-term perspective is how effectively a company allocates its capital and how accurately it can anticipate shifts in consumer demand. That's this week's PF video update, and I look forward to talking to you in another week. Thank you.